Hello and welcome to NIFA's webinar series. My name is Stacy Fatinos and I am the Homeownership Operations Manager at NIFA. With me today is Shelley Abraham and she is one of our compliance reviewers. This webinar focuses on NIFA documents and their completion. I'm going to pass control of the webinar to Shelley now. She is going to walk you through our NIFA forms and how to complete them. And I will be back at the end of the presentation to make some closing remarks.
Hello, everyone. As Stacy said, my name is Shelley Abraham, and I'm one of the main compliance specialists for NIFA, and I will be reviewing our program documents with you today. In June of 2018, NIFA began accepting e-signatures on all eligible program documents. Lenders who wish to submit documents with e-signatures must be approved by NIFA beforehand. Otherwise, currently the only document we can accept with e-signatures is the purchase agreement. If your organization does not currently participate with e-signatures and are interested in doing so, please contact the homeownership team either by emailing the homeownership mailbox or calling or emailing Stacy directly. First, I will be covering the application documents, which consist of Form A, Form D, and Form F. Form A is the household verification affidavit. You'll complete the borrower's name, the full property address, and then the household size in section 1 is broken out into the top line is anyone over the age of 18, and the next line is anyone over the age of 18 that will be residing in the subject property. The next section is regarding employment, and again, it's anyone over the age of 18 that will be residing in the property and their employment status. The next section is for tax return filing. If there's a year that they didn't file tax returns in the last 3 years, on line B or section B, you'll complete any years that they didn't file. And then below that are some predefined reasons. Otherwise, you can mark other and list the reason for non-filing. Being a student or being claimed by the parents is not an IRS acceptable reason, however, but an acceptable reason in the other category would be, for example, if they didn't live in the United States during that year or years. The next section is for all family assets, and it's broken out based on borrower, co-borrower, and non-purchasing spouse, as NIFA does count all assets towards our income calculation. And then the borrower, co-borrower, and non-purchasing spouse need to sign the form, but not the co-signer or the occupant. And we also need the email address to be legible. And if they don't have one, then that just needs to be indicated as well. Form D is regarding the potential for recapture tax. NIFA loans are financed using tax-exempt bonds, and so because of this financing source, borrowers are subject to potential repayment of the recapture tax under certain circumstances, and this form provides information necessary to disclose that possibility. Because it is provided at application and closing, if there's an error on the initial Form D, we can typically just issue a warning versus having to condition for it. And each year, NIFA updates this program document to reflect the most recent income limits defined by HUD. It is important to use the correct form when you're providing this to your customer. So unless otherwise instructed by a member of the homeownership team, the correct Form D for use is based upon the NIFA reservation date. So currently, if the loan was reserved prior to July 1st of this year, you'll need to provide the June of 2019 version unless the higher income limit is needed and indicated by NIFA staff. Otherwise, if reserved after July 1st, then you would be providing the July of 2020 version to the borrowers. Again, you'll complete the name of the borrowers, the first mortgage loan amount, the second loan amount, only if it's a HUBA. If there's other secondary funding, like the Federal Home Loan Bank grant money, that would not be completed on this line. And the total mortgage loan amount, if it's not a HUBA, will match the first mortgage loan amount. Otherwise, it's the first mortgage and the HUBA second added together. The federally subsidized amount is 6.25% of that total mortgage loan amount. And then you list whether it's in a targeted or non-targeted area, the full subject property address, and the county of residence. This next page again has the recapture tax. It needs to match exactly what was on the first page. So if you do update one or more of the loan amounts, then this will need to be changed both places on this page as well. And it will need to be signed by any borrowers, the spouse, but not the cosigner or the occupant. Form F is the HUBA notice to borrower. So this will only be provided if there's a HUBA second. We updated this in May because there is now a cap of $10,000. So the May 2020 version is what needs to be provided to the borrowers. You'll list their names, the full subject property address, the HUBA second loan amount, which it's a 5% maximum of the sales price up to the $10,000. And then if you're using the predefined documents in the lender online portal, then the interest rate and term will already be pre-filled for sure. If you're using your own, you'll definitely need to pay special attention to the programming of those items and make sure that they're always the correct terms. And this will be signed by any borrowers and the non-purchasing spouse, but again, not the occupant or the cosigner. Next, we'll be covering the closing documents, which consists of forms B, C, D, E, G, H, and J. And please note that forms E, G, and H, even if your e-signature approved through NIFA, those three forms are e-signature ineligible at closing. Form B will have the subject property address on line 1. Line 2 is for the final sales price. Number 3 is the number of persons in the household, which typically should match what is on Form A, but is subject to change. For example, if they were pregnant when they applied for the loan, but now they've had the baby, that baby can be counted in the household for NIFA purposes. Number 4 is the total household income, and that should match NIFA's worksheet, which will be out in Lender Online, or you can also fill in your underwriting income in number 4. And then that will be signed by any borrowers and the non-purchasing spouse, but again, not the occupant or cosigner. Form C is the subject property address on the top, followed by the final sales price. And it needs to be signed and dated by at least one seller. But we can accept electronic signatures on that. Form D, again, is the borrowers, and then that first mortgage loan amount, just like we covered with the initial documents. On the final, we can't warn you though, unfortunately, like we do the initial, if there is an error on this one, we will need a revised copy along with the borrower notification letter that you send to them, letting them know of the revisions, or it needs to be re-signed if there's errors at closing. And again, the recapture tax needs to match on the second page both places as well, and it needs to be signed by any borrowers and the spouse, but not the cosigner or the occupant. Then we have Form E, which is the tax-exempt financing rider. This will be filed with the first mortgage deed of trust, and only one should be filed. So it depends which program your borrowers have chosen. Form E1 is if it's FHA, Form E2 for VA loans, and Form E3 if it's conventional or RD loan. Form E needs to contain the lender's name and the complete property address, and be signed by the borrower, non-purchasing spouse, not the cosigner, but if the occupant has been pre-qualified by NIFA as a first-time home buyer and they're taking title, then they would sign this form as well. Form G is the HUBA promissory note. So this would only be if there's a HUBA second. The first payment date must match the first mortgage first payment date exactly. The principal loan amount must match in all 3 locations, and the numeric and alphanumeric lines should also both be complete and matching. And the maturity date is calculated on a 10-year amortization. And this will be signed by the borrower and then the cosigner if there is one. Form H is the HUBA second deed of trust. The closing date, again, must match all the other closing documents, and the manner in which the title is held to the property needs to match the first mortgage deed of trust exactly. And this will be signed by the borrower, co-borrower, non-purchasing spouse, and non-purchasing occupant, again, if there is one and they've been pre-approved and are holding title. Form J is the borrower acknowledgement letter. You'll complete the NIFA reservation number, the borrower names, or names if there's more than one, the full subject property address, the amount of the HUBA second loan amount. The interest rate, again, currently is 1%, and this amount, the loan amount, must match on the obligation letter and the other closing documents as well. And it will be signed, again, by the borrower and the co-borrower if there is a co-borrower. I'm now going to turn it back over to Stacy for closing remarks.
Thank you, Shelley. I appreciate everything that you did in working through this today. We want to thank everyone for joining Shelley and I for this presentation. As always, our team is available for questions. Our homeownership team members include Susan Laver, Shelley Abraham, Micheline Henning, myself, and Jackie Young. Please contact us at the phone number listed on this screen, on this slide, at 402-434-3900, or you can email any one of the homeownership team at NIFA, homeownership@nifa.org. Sorry about that. We hope you enjoyed today's presentation and have a great day.